Good evening, everyone, and welcome to tonight's class. Building your financial slogan. This is a live webinar where I'll be teaching you forex trading, step-by-step beginner's guide. Yeah. So, welcome once again. Welcome to this ultimate forex trading webinar for beginners, a step-by-step full course. Before we start, let me introduce myself. My name is Sunday Asamoah David, popularly known as Forex, the founder of Academy, Forex Academy. So let's move on. In today's webinar, we are going to be learning the following: what is forex trading? What is forex? What is forex trading? The size of the forex market. Where is forex traded? Example of forex transaction. Why should you start trading forex now? Currency structure, major currency, and currency nickname. So before we start, let me ask, what is forex? Forex is a global financial market where currency are being traded. So what is forex trading itself? Forex trading is a foreign exchange. So, and the word forex is borrowed from the word foreign and exchange. So from the word foreign, the FOR. Sorry, let me change my pen. Let me change the pen color. So it change. Let me use blue. Same blue will be up. Sorry, let me change a big blue here. Okay, good. Let me reduce the size. I'm sorry. Okay, so the word forex, for is for the four, and the AX is for the X. So that's why we have the word forex. And forex is the market for trading international currency. So the name, like I explained earlier, the name forex is provided from the word foreign and exchange. So currency traded against each other as exchange rate pair. For example, Euro USD is a currency pair. For trading, the euro is against the US dollar. So we'll be talking about more as we go on with the class. Sorry. So forex is the biggest market. That's the forex giant. Forex is the giant. So as you can see, the size of the London Stock Exchange is $7.2 billion. The size of the Tokyo Stock Exchange is $18.9 billion. Why the size of the New Stock Exchange, New York Stock Exchange, is $22.4 billion. But if you look at forex itself, forex is traded in $6.6 trillion. This is average daily trading volume. So the capital traded in forex every day, the money brought to the forex market from the commercial bank, individuals, and so every day, averagely $6.6 trillion. So that is why forex is the largest market. That's why it gives you the ability to make millions, billions in the forex market. So that's why you have the ability to make millions, billions in the forex market. And if you look at it, you will see that from here, if you look at it, you see that from here up here, if you look at New York Stock Exchange, is 80 times. You get 80 times of it in forex alone. So that's why it's the giant. It's the biggest market. That's why people are able to make millions in forex, because there's enough money there to be made. So let's go on with the class. Now, where is forex traded? Forex is traded on your MT5, MT4, trading view, Ethereum, then Ohanda. And but 90% of Forex trader use the MT5 and MT4 to trade because it gives them the ability to do your analysis, to do your practical, to use your strategies. So this can be done on MT4 and MT5 very well. So MT4 and MT5 is owned by the same company. So MT5 is just the upgrade version of MT4, where it has more features than that of MT4, and is this 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 is provided from the company called the MetaTrader. So the MetaTrader, so the and this is where I would practically recommend this if you want to start trading forex, to use MT5 or 4 as to start trading, so you can do a lot of practical analysis there. So let's move on with the class. Now, example of forex transaction: the trader buy the EURUSD at 1.2005 and purchases $5,000 worth of currency. Later that day, let's say the price has increased to 1.2550. So if you practically calculate, you see that the trader is up to $25, and that can be within seconds and can be within minutes. The profit depend on the volatility of the market. So, and let's say the market went against the trader. So, and if you check well, you see that the trader will actually be down with, let's say it's going against the trader for 1.2430. So if you calculate, you see that trader will be being lost of that $5. So I'm going to explain more about that as we go on with class. Okay, let me give you a specific example of what I just said now. Let me go to a plain sheet where I can explain that better. Sorry. So let's say, for example, now you are in Nigeria. Let's take Nigeria for example. So you are in Nigeria here. So you want, let's say you want to travel. Okay, let's say the Champions League final is like a football, like a fans of football, you like watching football and stuff like that. Let's say the Champions League final, and you want to go from Nigeria to, let's say the Champions League final is hosted in UK. So you want to go from Nigeria to the UK. You know, you actually have naira with you. You have naira with you. So let's say you're having 100,000 naira, and you want to travel to the UK. So you are traveling to UK, and you have to change this currency, this 100,000 naira you're having with you to 100,000 naira you're having with you to dollar. And let's say the exchange rate at that particular time is, let's say the exchange rate at that particular time is 750 per dollar, per dollar, 750 naira per dollar. So let's say it's 750 naira per dollar. So, and you have to change this to dollar. So that means if you are to give them 750, you'll be getting only $1. So now, if you are to get $100, that means you have to times 750. You have to times 750 times 100. So you have to get $100. So you have to times 750 times 100. That is, it's going to cost you 775,000 naira to get $100 at that particular time. So to get $100, then I say, okay, as you're about going, then you hear that, okay, the match has been postponed or they cancelled the match for some reason. Maybe there's an emergency news, or there's pandemic and so that they cancel the match. So now you are having this $100 with you already. You know you've already changed the money. You're having this $100 with you, and you change it at the rate of 750. So to change at the rate of 750. So if you have to convert that dollar back to naira, let's say you have to convert that dollar back to naira. and eventually naira has increased. So it has increased in rate. It's now 760. So you get what I'm saying? So it's, you now have to change it back to 760. You know, you'll be in more profit if you calculate it. So you have to times that back, your $100 you're having to take it back 750. So you actually gonna be having 76,000 naira. And you know, you purchase this, you actually change this for 75,000 naira. So now, for that short time, you've gained 1,000 naira profit income. So that's how forex is actually is. So then I'll say, actually, okay, naira actually has more value. Let's say instead of it going to 760, it came down to 740. So if you have to change that $100 back to naira, actually going to have me seven, sorry, so you're actually going to be having 74,000 naira. We actually going to have a 74,000 naira. So you see that you are in a loss of 1,000 naira. So that's actually what forex trading is all about. So you just buying the currency against one. So exchanging, you just exchanging currency against each other. Let's say you are exchanging dollar against naira, you're exchanging naira against dollar. That's what just forex trading is all about. So now let's move on with the class. Let's go to the next slide. Oh, sorry. Um. Okay. Yeah. So we are done with that. Now the next slide. Why should you start trading forex now? Yeah. Why should you start trading forex now? Now there are 5 reasons to start trading forex market now. The first one is trading hour. The second one is your leverage. The third one is your liquidity. The fourth one is your ease of access. Then the fifth one is transaction cost. Now let me explain all this. The trading hour. The forex market is open 24 hours a day and 5 days a week. So 24 hours a day, 5 days a week. So that's enough time to actually jump into the market. Let's say you have work, you work in an office where you just have to go to your work. Maybe when you are free at night, or maybe when you are free from work, or when you close, maybe you close early, then you came back. So you're like, okay, now let me go and trade. Let me use this small time to trade. Then you can enter, you do your analysis, you test your strategies and stuff like that. Then you take your trade. So 5 days in a week. The only days forex market open is Saturday and Sunday because that's an holiday. So from Monday to Friday, the forex market is always active 24 hours. So you can trade anytime, any moment. Now leverage. What is leverage? Leverage is the ability to make a huge profit with the help of your broker. So leverage is just like a broker borrowing you money. Let's say you have, let's say you have 1,000 naira, $100. Sorry, let's say you have $100 to start your trading. With this $100, do you know you can't trade anything? In fact, you can't even open any position. But with the help of leverage, some brokers give the leverage as 1:1,000, 1:500. In fact, some brokers give up to the level of 1:2,000. So it's just like your broker borrowing you this each money to trade. Let's say you're having $100. So if you deposit your $100, then you times it with this 1 year. This 1 year, it's just like you'll be having close to $10,200. $10,200. That's what you'll be having. $10,200 if you are trading with a capital of $100. So it's just like your broker borrows you $10,100. You see that? So they actually borrow you $10,100 so that you can make profit, so that you can enter the market, so that you can trade, so that you can take higher risks, so that you can trade with big lot size. So if not for the help of brokerage, in fact, nobody could be able to trade forex. But this brokerage is very helpful. So that's why when you want to trade forex, it's good to find a broker that gives a very good leverage. Some brokers give the leverage of 250. So, and this is still okay. This is still okay. So with the help of leverage, that's why people are able to make money quick fast in forex. Now let's talk about the liquidity. Liquidity means high trading opportunity and ability to make millions. Sorry, I S is omitted there. So the ability to make millions. So now, what does liquidity really mean? Liquidity is just like, your commercial banks, your big companies. They come to the market, they bring big money to trade. So forex market is very liquid. There are a lot of people trading the market. That's why you can see you can enter a trade within 5 minutes, and you know with the help of liquidity within 5 minutes with let's say you open a position of 0.01 lot size. Within 5 minutes or 5 minutes can be up to profit of $20. That's the help of liquidity, because when the buyers are much, when you actually buy and the buyers are much, so it will trigger the sellers to sell. So you as buyer, you are buying from them, they are selling to you, so you're gonna make money, you're gonna make profit. Now, ease of access, so you just need your laptop, your phone, and internet, a very strong internet. So that's very simple. Now, transactional cost. Forex has a low transactional cost compared to that of stock. The spread are low. So if you actually know about stock, you know very well the spread are very high. And when the spread are too high, when the spread are just too high, that you're gonna end up blowing your money, you're gonna end up blowing your account. But in forex, the spread are very low. You see something like 0.0 spread. So nothing like very low spread. The high sum you just see like 0.01. So spread are very very low. Now let's move on to the next slide. Now, currency structure. Now, this currency structure, each currency consists of three letter codes that is considered international as general code to recognize the currency. Now, like when you hear US dollar, when you hear US dollar, the first two letter here stands for this country. The letter here, the last letter, stands for the currency they spend. And each currency, they used to have three names. There's no currency in forex that you see that have more than three names. It's only three names, three letters. Three letters. Now, any currency you see, the first two letters you see stands for the country. Then the last one stands for the currency they spend. Now, US, that's the UK or your American, the United States of America. So US. Now the currency they spend is dollar. The currency they spend is dollar. So that's why when you see the US, that's the country, the D, that's dollar, that's the currency they spend. When you see JP, that's Japanese. When you see the Y, that's yen, the currency they spend. When you see NZ, that's New Zealand. Then when you see the D, that's dollar, the currency they spend. When you see euro, so actually euro is, in fact, the currency they spend is euro. The name of the country is still euro. So that's one is very simple. When you see CHF, that's Swiss franc. So the country is Swiss, while the currency they spend is franc. So when you see CAD, that's card. That's the CA is Canadian, while the D is dollar. That's why I call it Canadian dollar. When you see your GB, that's Great Britain. Great Britain. The P there is the pounds. GP is the Great Britain. The P there is pound. So Great Britain is your UK, London, Manchester, all those stuff. They are Great Britain. So the country itself is called Great Britain, while the currency they spend is pounds. When you see your AU, that's Australian, then the D is the dollar. It's SEC now. SE is Swift, while the currency they spend is chrono. So that's what they call the currency, the ISO S currency code. And actually all these currency you are seeing here, they are the major currency, and those are the currency that are the currency we're going to trade in this in forex. Those are the currency we're going to trade in forex because they have this high portability to make money. So unlike all these exotic currency where if you trade exotic currency, they are too high of spread and stuff like that. So you have to do a lot of analysis. At the end of the day, end up being your account. So this currency are the major currency we're gonna be trading in forex. So let's go to the next slide. Now, major currency, like I said before, there are only 8 major currency in forex. 8 major currency, and these are the 8 major currency we're gonna be trading. So the first one is the USD, the second one is the Euro, the third one is the Great Britain France, your Switzerland, the Japanese yen, the Great Britain France, the SND, like exotic pair. That's all those exotic pair. That's where you see the sorry SZAR. Those are exotic pairs. We are still going to that. We're still going to talk about that more on exotic pairs. So we are actually going to be trading the major currency, and these are the top 8 major currencies we're going to be trading. So let's move to the next slide. Now, all these currency you see here, they have their nicknames. So as a forex trader, you should be able to talk as a forex trader. Like when you see the doctors, they talk when doctors are talking. If you actually stay, you're not going to understand anything. Even when doctors write, you that you're not a doctor, you can't read it because they write in code. That's their code. So as a forex trader, we also have a code. So like you actually say, okay, the US dollar, it has its nickname. In forex, we call it the buck. The euro, we call it the fiber. The Japanese yen, we call it the yen. The Great Britain pounds, we call it the cable. The Canadian dollar, we call it the loni. The Switzerland dollar, we call it the kiwi. The Australian dollar, we call it the oxy. While the Switzerland dollar, Switzerland franc, we call it the Swizzy. Switzerland franc. So when you hear about forex uh, traders talking about, okay, I bought a fiber, I shot the buck. So what they're actually saying is, okay, I bought it, I long the fiber, I short the buck. So actually, those shorts, long and short, we're still gonna talk about that in our next class. So this this also means something, but we're gonna talk about that in our next class. We're gonna talk about that in our next class. It's also terminologies. These are also terminologies used in forex trading, but we're gonna talk about in the next class. That's not for this particular webinar. That's not for the particular class. That will be in the next class. We're gonna talk about that. So, as I said, I'm taking you step by step. So we are taking everything in order. So, with that being said, we come to the end of the video. So, thank you for taking your time to watch, you know, to attend this webinar. So, in our next video, I'll I will indicate when the next class is going to be, probably in this week as well. So don't forget to like, subscribe and share, and make sure you turn on the notification bell so up you don't miss infos like this, information like this. So thank you for watching. See you in the next class. God bless.